and I hope you are too, because the transition to a low-carbon economy depends on massive, rapid investment in a resilient infrastructure. But capital, policy, and execution often move at very different speeds. So to truly mobilize capital at scale for infrastructure, we need to work across multiple dimensions. And that's really what we want to discuss today. Because it's not just about the availability of capital, it's about the ability to deploy it effectively through innovative financing models, in enabling regulatory environments, with public-private cooperation, and many more factors. When we think about infrastructure, we want infrastructure that is climate smart, economically viable, and socially inclusive. So I'm really happy to have with us today a panel who can speak across all of these themes, and I think we're going to have a really rich discussion. So please join me in welcoming our speakers. Karen Feng, who is the Global Head of Infrastructure and Sustainable Finance at Bank of America. Tufi Dyer, who is the CEO of Transnordistina Logistica. Laurent Fayola, who is a member of the Executive Committee and Deputy Head of Infrastructure at Ardian, as well as being the President of High 24. And Michael Kelly, the Chief Legal and Sustainability Officer at OMERS. So maybe, Karen, I can start with you and give you an easy question off the bat. Just kidding, it's going to be a little bit tricky. But at Bank of America, you have the opportunity to really see what projects get funded and what projects don't. And so I want to ask you how you think about bankability, especially when it comes to not just mature, proven technologies, but to more innovative projects that are maybe a little riskier or tougher to price. How do you make sure that investment is flowing to those as well?
Well, thank you for having me on the panel, and thank you for Milken Institute for convening us, and thank you, Tanya, for moderating. I will take that question as why, after 27 years, I'm still at a bank. And I do think this front row seat of seeing global capital flows and what gets funded and what's struggling to get funded is a really, really good place to be, because we know the priorities and we know the solutions that we might need to deliver collectively to solve the problem. So to your question, I think infrastructure is probably the most uniting asset class. It's apolitical, it's bipartisan, whatever you want to call it, because if you ask the 8 billion people on the planet what actually is important to them, it is clean air and clean water, and it is access to technology, access to energy and power, and it's access to economic opportunity and prosperity. So infrastructure, by definition, is the blood in the veins, and the more infrastructure we can deliver more cost effectively, the better. So when you think about clean energy finance as one set of data sample on sustainable infrastructure, that reached $2.1 trillion last year globally. That is a milestone that's been growing at 25-30% CAGR in the last 6-7 years. And a lot of that is going to mature technologies, to your point, renewable energy generation, storage, EV and transportation, energy efficiency, and so on and so forth. But the emerging technologies are starting to get more dollars, whether it's carbon capture and sequestration, whether it's the e-fuels in SAF, and not enough, but we're still seeing very successful examples, which I can give you some examples on a no-name basis. These transactions are going from tens of millions of dollars to billions of dollars in tens of billions of dollars, and that's incredibly encouraging to see. You are seeing advanced geothermal, nuclear, long-duration storage being talked about a lot more, and there are companies that are going public, and there are financing real CapEx-heavy projects being funded now. That's different than 5 years ago. If we talk about infrastructure, we don't talk about digital infrastructure, we'll be totally tone deaf. Because if you open the newspaper, you look at what's actually being funded right now, hyperscaler-driven data centers and all the digital equipment within, that's GPUs, that's gensets, that's cooling equipment, that's all of the racks and servers that's going to the data center, which, by the way, on average costs about 3x more than the data center shell itself, and the energy and power that needs to be supplied to power the data centers. If you read the newspaper today, you will see some of the data centers in the US are actually just waiting for the power to come online. So the energy and power and the compute power really goes hand in hand. And hyperscaler-driven, sort of triple net lease contract-driven financing for data center shell is very easy, using your term, but every investor, every project finance bank, every long-term strategic investor has to think about the concentration risk as well. Just like you think about Magnificent Seven, their market capitalization in the S&P 500, you think about project finance debt on the back of these hyperscaler credits. All of those are essentially what banks and funders and investors have to think about: concentration risk, technology risk, technology the risk of becoming obsolete, right? All of these things are things that we haven't had to think about before. But when you look at the Q4, data center financing in the United States exceeded $125 billion in debt, right? When you think about that quantum, it used to take years to get to that size, but now we're looking at a short period of time with a concentrated amount of capital demand. The new risk factors, the speed, right, and the access and infrastructure, supply chain, labor, all of those things are coming up as well because of the speed and the scale. So the last thing I would say is nature-based solutions. I think that's actually a topic that's super, super important, because without nature, without the planet, what are we going to all do? I for sure do not want to move to Mars. So when you think about that, we have to improve nature and biodiversity. And some of I'm sure the panelists can talk about this as well, we are actually raising capital for not just reforestation projects, we're actually raising capital for carbon credit development companies that actually can devote their entire attention and focus in the space to get more water resilient, biodiversity improving, nature-based solutions funded as well. So I'll pause there.
Thank you, Karen. And you touched upon something I think is really interesting, both digital infrastructure, but also as we talk about nature-based solutions, the fact that what we think of as infrastructure has also evolved, right? That there's new types of infrastructures that we are now recognizing as being equally essential, right, to decarbonizing the economy and to promoting a more resilient, sustainable future. And I actually want to go to Laurent for the follow-up on this, because I know your company has been doing a lot of investment and looking at nature-based solutions and reforestation and some of these more innovative projects. So could you talk a little bit about your work there and kind of the challenges as well as the opportunities when it comes to mobilizing investment?
No, you're right. And I think if you look at our business, is really like what have been a bit described: energy, telecom, and transport, right? The key question is how do you do it on a sustainable, I would say, approach. So that is something we are doing at Ardian, pushing the boundaries, pushing also getting objective to all our managers, right, in the investment base. It's also measuring. We got 4 data scientists in the team, only bringing data and collecting data to the companies, just like making sure that they are on the right path. And we stopped saying but what can we do on top, right, is already part of our job. And we developed 3 initiatives. One is to help globally all small developers and renewable, so all form of renewable. It's also battery storage. Storage is part of it. We develop another expertise on hydrogen, so green hydrogen or blue hydrogen, at least clean hydrogen. And the point was to look at all the value chain and see what can we do maybe to help SAF, eSAF, what can we do to help refineries, cement plants, and lower the carbon emission of their processes, right? And the very final one, very interesting too, is we were looking at what can bring nature-based solution, for example, as major carbon sink, right? And we are developing today a fund on that expertise. The point is to reforest, afforest, develop mangrove at scale, right? We want to be big to really make an impact. And what is interesting with those solutions is you can capture a ton of CO2 at a cost of roughly $30, $40 today. If you compare with DAX, so technical solution, it would be much more like something close to $600, $700 per ton. So there's a sense, there's also a very strong economical sense to develop those solutions. So that's what we are doing. We will announce in Belém tomorrow, right, the first closing on the funds. But I think it's a very appealing ways of capturing also the carbon. Something which I think is also interesting in that expertise is while we are developing new habitats, new environment. We are also pushing the boundaries on biodiversity and, I mean, definitely helping the local communities, because we're bringing them also some support, developing maybe a bit of infrastructure, maybe some agroforestry, maybe some timber on top. But that is really the revenue we want to leave to those communities.
Thank you. And maybe, Michael, I could come to you next. Because at Omer's, it's an institutional investor, a pension fund, so you have a different appetite maybe for risk and a different time horizon than commercial lenders or other types of investors. So how do you think about this question of sustainability versus financial returns?
Yeah, first of all, thank you to the Milken Institute for the invite. It's just a pleasure to be here in Sao Paulo. But we don't think of it, so we're the Ontario Municipal Employees Retirement System, so we are a pension plan for basically municipal workers, police, firefighters in the province of Ontario in Canada. We have about $145 billion of assets that we need to invest to make sure that we fulfill our pension promise to all our pensioners. So when we think about sustainability, we don't think of it as a trade-off to returns at all. We're not an impact investor, but we are a fiduciary investor, so we are focused on the returns, but we don't see any daylight between the sustainability initiative and how we invest. Our belief is that companies that have strong sustainability practices, we used to call them ESG practices, maybe not using that term as much anymore, are generally going to perform better, particularly over the long run. So what we do is we look at all these factors when we're looking at making a major investment, and we're typically a direct investor, so we do have a funds program, but the vast majority of our assets, particularly in infrastructure, we own them directly with partners and otherwise. And so the way we think about it, it's a kind of a three-pillar approach. The first is integration, collaboration, and engagement. So ICE is the acronym, which is, I guess, a typical Canadian motif. But integration simply means that when we're looking at these major infrastructure projects, for example, we are looking at all of the issues around environmental, climate, energy transition, and otherwise to try to determine what those have to say about the risk and the opportunity in the investment. So it's not separate from returns, it's all part of the returns. And if I go to the E pillar next, that's engagement. So we own these companies often directly, so we'll have seats on the board. So we're active in that sense as a steward for our pensioners, sitting on the boards of these companies and trying to advocate for long-term thinking. And the third element of that is collaboration. So collaboration means attending events like this, where we have our ears wide open on opportunities around the world that would be suitable for a pension plan like us, but also working with organizations. The Investor Leadership Network is here, so it's 14 institutions trying to really improve the sustainable finance ecosystem. And including with the federal government, I was on a Sustainable Finance Action Council, which looks to improve the data around climate change, include the metrics, also to improve disclosure around climate change. So we've kind of put this all together in what we call our Climate Action Plan, which is a series of goals, net zero by 2050, but then 5-year interim targets on the carbon intensity of our portfolio, making sure that current investors are thinking about the emissions of the portfolio over time. We've also got a bucket of $3 billion where we can invest in what we call transitional assets. It's a transition sleeve. So these would be high carbon assets which have a decarbonization element to them. So if we put them in the sleeve, we don't count them against our interim targets. The idea is we didn't want to disincentivize our portfolio managers from investing in these type of companies because they might throw us off a short-term target. But the reality is we'd rather be involved, or we're happy to be involved in a decarbonizing asset rather than just selling it out of our portfolio. So we're broadly invested across the spectrum in energy. Our largest single investment is in the Bruce nuclear power plant, so that's a direct investment in nuclear energy. But we have a lot of transmission and distribution assets, solar, wind, and otherwise. And we still have some investments in traditional energy, just given where demand is and the need for our fiduciary imperative. So we're trying to gauge the pace of the energy transition. Ideally, we're trying to be a step ahead of that, like any good investor would be. But really, eventually we won't have to call it sustainable investing. Our view is it's just part of how we do things. Like we look at CapEx and OpEx and market share, and sustainability is all part of that. So that's the way we think about it. And we're the quintessential, I think, long-term owners. Our youngest member, believe it or not, is 14, and our oldest is 108. And that's not because children are working in Canada that way, but they might have a summer job, with the municipality, and they've decided to join the pension plan, which is good for them. So we may see our members across a lifespan. So, we think for us, a quarter is 25 years, not 3 months. So that's kind of the mentality that we bring to it.
Yeah, I think that question of thinking a long time horizon is so important when you talk about infrastructure investment, because these aren't projects that happen overnight, right? You're looking at 10, 15, 20 years typically. And so the fact that you have members who are now 14 and will be on this planet for a very long time, I can see how that would reinforce, right, the need to focus on sustainability and that long-term vision.
And it is often very much driven by our pensioners. It remains the number one topic at our annual meetings in terms of what we're invested in terms of the environment and climate, notwithstanding the geopolitics and everything else. So it really is top of mind for our pensioners.
So before I come to Tufi, I want to push Michael and Karen a little bit on the question of kind of financing and how do you build kind of that capital stack, right, for an infrastructure investment. Because when you think about the role of a commercial lender versus an institutional investor, there might be different places where you're bringing your money, whether it's the project development phase or whether that project has been refinanced once it's already built and you have an asset. So how do you, maybe I can start with you, Karen, and then Michael, have you comment?
Maybe some tangible examples will be helpful. We actually helped one of Michael's peer pension funds, his portfolio company called Pattern Energy, that was building the largest renewable energy plant in the United States. It's a wind farm in New Mexico, and the transmission through Arizona into California, which obviously always faces power shortage. When you look at that project, it took, I believe, close to 10 years to permit, and obviously they have utility offtake. So the contracted cash flows are always the easiest and cheapest to finance. If not, you have to think about, some kind of assistance, right? But because of the renewable energy tax credits that were available, clearly there's, people like to think blended finance only happens in emerging markets. No, when you think about tax incentives that help foot the bill, right? It's equity capital, it's tax equity capital, it's project finance debt capital. All parts of the capital are important, right? So obviously that benefit from the United States tax incentives on renewable energy. And when you think about the sponsor and you think about the project finance debt that we were able to bring in with other partners, that enabled this project, and that's actually on schedule and on budget right now. And I'll take another example in the United Kingdom. We were part of the consortium that helped finance the Northern Endurance Partnership. That's one of the largest carbon capture projects done globally right now. And the government and the industrial emitters, you would call them, and everyone worked together to actually transport the CO2 from these industrial facilities owned by Equinor and Total and BP. Think about these are major industrial players. And the government was essentially the contract for difference off-taker of the carbon sequestration that's actually happening. So you take the credit, you take the carbon emissions from the industrial sites. We are building a undersea transmission cable into an undersea storage site to permanently store the CO2, right? Long-term planning, a long time to permit. You have to do environmental studies. You have to make sure you're not hurting the fisheries and animals in the sea. But you are actually permanently capturing and storing carbon. And those take a tremendous amount of global banks, global investors, right? The industrial players we talked about in the government. And I can tell you the same thing happening in North Dakota. The reddest state in the United States, we did a very major carbon capture project leveraging the Inflation Reduction Act, the 45Q, and some of the clean fuel credits. So all of these always takes engineering, and sometimes I feel like we're architects. We're bringing different players, we're blending the different risk and return profile, we're de-risking. Insurance has a very important role to play. We don't have enough insurance on technology risk, on a variety of other new engineering risks. So it will become more scalable and more financeable, but these are large transactions that are happening in the last couple of years that I think are very, very, very promising.
And Michael, how do you think about OMER's
I
role?
mean, we're not typically, I won't speak for all pension plans, but not typically the best kind of investor, I think, on a greenfield project or a construction project. Our risk return, requirements aren't such that we would kind of typically be in at that early stage. We'd prefer to come in later when some of the construction risks or development risks or technological risk has been stabilized, so to speak. So that I'd use that as kind of a broad statement. However, we do have we have a venture capital business, for example. So we have some investments where we're taking early stage risk in technologies, and otherwise we have an investment in a company called Deep Sky, which is a carbon removal play. So we can play in that space, but typically we will wait until it's got steady operating revenues and otherwise. The one thing I mentioned the Bruce Nuclear Power Plant. It is also a construction project in the sense that there's a whole refurbishment project going on 8 nuclear reactors, which is going to be taken over the next 20 or 25 years. And so that is a construction project, but with an asset we know it's on a site that's already permitted, with offtake agreements and otherwise, and with the province of Ontario. So that's one area where we are taking some construction risk there, but typically we would come in later in the process or higher in the stack. Yeah.
And Laurent, I know you've done brownfield and greenfield.
Yeah, maybe one word. First of all, I think if we look at what is in front of us, and if we want to move at the right pace for the sustainability play, right, is we need to move in terms of speed and scale much more than what we ever do before, right? So that is really critical. So it's massive investment that would be needed. If we are moving on some areas which are a bit brand new, like you want to play, for example, ESAF, you will need support from ministers, right? Because you won't find day one the equilibrium. It's a bit like what we've seen on renewable 25 years ago. What was the price of the megawatt on solar? 400 euros, right? Today it's less than 40, right? So then you can get the equilibrium, you can develop without subsidy today. But during 15 years, we were really like, could it be CFD? Today we get new usage, like do we need pipes for the CO2? Do we need pipes for hydrogen? All this, there's a big play on greenfield, but we will need support. And that is another other point which is important, is regulation and the way public and private are dealing would be critical, right? But don't forget, we need some support. And overall, fair to say that if we're moving to green or to clean, let's put it this way, would be more expensive than with fossil fuel, right? And that is maybe not a message which is spent a lot around the world, is yes, we need to move quickly, we need to move at scale, but we need support also.
And that might be a great segue, Tufi, to asking you a question, because you are responsible for one of the biggest current infrastructure projects in Brazil. And so you've sat on the side of the table where you are having to raise capital to invest in your project. And we had talked a little bit about the importance of foreign investment in particular for a Brazilian project. Could you speak maybe to that a little bit, sobre a importância de investimento estrangeiro?
May I speak
In português, tudo bem. And I'll summarize for the group.
Ok. Thank you, Anya. Primeiramente, eu queria dizer que o nosso projeto é a cara do seu fundo, porque ele já é um projeto maduro, ele já é um projeto onde o risco de engenharia é muito pequeno. Eu queria falar, primeiramente, em aspecto geral, né? O setor ferroviário brasileiro, só da no curto prazo, até 2027, ou seja, em mais 2 anos, irá investir mais de 10 bilhões de dólares agora, em curto prazo, com as renovações antecipadas que tiveram das principais concessionárias brasileiras, incluindo a Transnordestina. O Plano Nacional de Ferrovias para os próximos 15 anos, ele monta alguma coisa em torno de quase 60...
Pode
You can go,
continuar.
you can-
quase 60 bilhões de dólares. Né? Isso, para o país em desenvolvimento como o Brasil, é uma notícia extraordinária, porque vai transformar a infraestrutura ferroviária brasileira e vai mudar um pouco a modalidade de transporte que nós temos ao longo do tempo, onde o rodoviário predomina. Né? Recentemente, só o governo brasileiro começou a incentivar as empresas através da emissão de debêntures. Né? Então, somente nesse ano, agora de 2025, já são mais de quase 50 bilhões de reais, ou seja, mais de 8 bilhões de dólares em debêntures incentivadas. Isso é fundamental para projetos de longo prazo, como um projeto de ferroviário de longa maturação. Então, a Transnordestina, hoje, é o maior projeto de infraestrutura em construção no Brasil. Né? É uma ferrovia que já temos praticamente na fase 1, que ela entra em operação no final de 2027, mais de 77% concluída. Inclusive, este ano ainda, provavelmente agora, meados de dezembro, nós iniciaremos o que nós chamamos de operação comissionada, que é o teste já da ferrovia, ainda com pequenos volumes, mas que ainda não atinge aos principais portos, mas ela faz um transporte interestadual entre o Piauí, Pernambuco e o estado do Ceará. Então, é fundamental que o capital estrangeiro possa vir ajudar nos financiamentos de longo prazo com projetos maduros. A engenharia brasileira, eu quero dizer que ela já domina em muito a construção da infraestrutura. O problema hoje maior no Brasil realmente é o custo do dinheiro. Né? O custo do dinheiro, ele praticamente inviabiliza projetos apenas para iniciativa privada. Então, é necessário ter, sim, né, grandes investidores que pensam a longo prazo, né, e que trazem para essa matriz de transporte, como é o ferroviário, incentivos que possam ajudar no financiamento nessa primeira etapa. Eu diria que, no caso das ferrovias brasileiras, se a gente puder falar um pouco das emissões, já posso emendar com essa diferença que existe, eu vi todos abordando, né, o meio ambiente. E só para se ter uma ideia, no Brasil, o que a gente chama de eficiência energética, quando compara-se o modo rodoviário com o modo ferroviário, as emissões de gases pelo ferroviário é 85% menor do que no rodoviário, mesmo contando com locomotivas ainda diesel elétricas, né? E o Brasil, evidentemente, planeja também, como outros países desenvolvidos, evoluir nessa sua matriz. Eu diria que hoje, só para se ter ideia, o consumo médio no Brasil é 3,33 litros por cada 1.000 tonelagem quilômetro útil, ou seja, TKU. contra no modo ferroviário, que é 21 litros por cada 1.000 TKUs. Isso faz uma diferença enorme no que diz respeito a essa eficiência energética. Hoje, as nossas ferrovias, comparadas com as ferrovias americanas, elas emitem a metade já no Brasil. Tamanha o desenvolvimento que vem sendo feito ao longo desses anos. Só para finalizar essa parte, se nós só o reflexo direto sobre as emissões de gases de efeito estufa, toda a carga transportada por ferrovia, ela gera hoje 8,35 gramas de CO2 por TKU, no modo ferroviário. Quando nós vamos para o modo rodoviário, esse número vai para 52,77 gramas de CO2 por TKU. Eu vejo que nossa diretora de sustentabilidade está ali, a Helena, né, que trata da nossa toda a parte do grupo CSN de meio ambiente, e ela também está enganjada nessa luta de reduzir cada vez mais. Um último dado: cada 1% que a gente aumenta na matriz de transporte com ferrovia, 1% apenas que aumenta no total transportado, comparando ferrovia e rodovia, isso representa uma redução na emissão de gases de efeito estufa de 2 milhões de toneladas de CO2 por ano. É o mesmo que nós disséssemos que a cada ano o sequestro de carbono representa como se plantássemos uma floresta inteira de árvores nativas do tamanho da região metropolitana de São Paulo por ano. Então, a diferença entre o modo ferroviário e o modo rodoviário, especialmente para o meio ambiente, é muito grande, é estrondoso, né? E por isso, acho que não o governo, mas o Estado brasileiro, independente de qual tipo de governo, tem estimulado nos últimos anos essa mudança na matriz de transporte, incentivando cada vez mais o aumento das ferrovias.
Obrigada pela fala. Thank you so much. You touched on a couple of points I want to follow up on with some of our panelists. One is the question of incentives, which gets into regulatory frameworks as well. But you also talked about the importance of, decarbonizing transportation. And when I think of that, I also think about the social element, right? So we've talked a bit about the low carbon, but obviously local communities are very important as well. And so maybe, Michael, I could come to you, because I think Canada has some similarities with Brazil in the sense that community engagement and indigenous rights are quite important for infrastructure projects. So how do you think about that and policy innovation more broadly? Yeah,
there's some really interesting financing mechanisms going on in Canada right now, and I'll touch on the indigenous aspect of that. But for example, the federal government has seeded something called the Canada Growth Fund, which is $15 billion of capital to be invested in furtherance of clean energy or the energy transition. And this money has been placed with one of our pension plans to invest it under a separate mandate. And so it has some catalyzing elements to it. Can take the first risk, first loss, and that's meant to kind of get other institutional investors into those projects. So that's an interesting element. The other is there's something called a Major Projects Office, which has been developed in Canada, and that's to try and push projects that are deemed to be critical to the Canadian economy through the system more quickly, whether it's permitting, licensing, or otherwise, because there's been a struggle sometimes in Canada to get large projects done. One of the interesting elements of getting large projects done in Canada, because they usually require a vast amount of land, depending on the type of project, is the relationship that we have with our Indigenous communities, our First Nations and Métis and Inuit communities. And I don't know how much people know about the history of Canada, but essentially, Canada has a number of treaties. The British Crown has signed a number of treaties with our First Nations, Inuit, and Métis communities over many years. And when we repatriated our Constitution from the UK in the 1980s, Section 35 of our Constitution now recognizes and affirms all existing Aboriginal rights and treaty rights. And so this makes for quite an interesting landscape in Canada. When you're doing something across the land that traverses over Indigenous traditional territory, there is a duty to consult those First Nations. And we haven't always done that very well in the past in terms of that duty. So we're trying to reimagine a new way with our Indigenous communities. And part of that is through coming at it in a different way. It's not a box-ticking exercise to get your consent, but how can you really partner with the Indigenous communities? And that often now starts to look like some sort of participation in the project, some sort of equity participation in the project. So there's organizations like the First Nations Major Projects Coalition, as an example, to try and help the First Nations think about how they can participate. One of the challenges in First Nations or Indigenous communities participating is where do they get the capital from? Our legislation in Canada actually restricts them from granting security interests over their land, which is their primary asset. So this is a structural problem in Canada. And so one way we're trying to overcome that is through Indigenous loan guarantee programs at the federal level or at the subnational. So, that Indigenous communities can raise debt, for example, backed by government guarantees, and that way they can fund their equity in these projects. So I think that's really an important way to get projects done in Canada, that we're kind of reimagining how to do this relationship. A couple of quick examples from OMERS. We were involved in the development of a transmission line. I said we don't do greenfield, but we were involved in a transmission line development. And with the Indigenous communities along the route, that included an economic participation agreement for like jobs in terms of the development. And then at the end, an equity participation, a small equity component of the project. That was one. And then I talked about the Bruce Nuclear Power Plant. So, an offshoot of the nuclear process is you can develop medical isotopes, which can be used for, people are probably familiar with how those are used in the health community. And so Bruce Power is developing a relationship with the Saugeen Ojibwe Nation, which is on where the site is on their traditional territory, for a partnership in terms of developing that part of the project of the Bruce Nuclear Power Plant. And again, they are in the process of raising funds using Indigenous loan guarantee program. So this is important in Canada. We've got to get it right, and I think that there's good attitudes towards that, and I think we'll see some projects unlocked because of this development.
Thank you, Michael. And I'm really struck by, I think, the role of government and policy and regulation in unlocking or creating an enabling environment for capital and infrastructure investment. So maybe, Laurent, I could call on you because, certainly when you think about clean hydrogen, that's an area where the regulatory framework is still evolving. So what are some of the challenges when you don't have that long-term stability, right, in terms of the frameworks? How do you mitigate or manage that risk?
So that is, especially for hydrogen, the main issue today, right? So you need to look. Hopefully we can play globally, right? But you need to find the champions. Where are the countries where you'll get the right support for your project? So, speaking about hydrogen, maybe Japan is one, Korea is another one. US was a big one, but I think it changed a bit. So good luck for people who would like to do green hydrogen in the US today. So you need to deal with this and to, take some bets sometime, right? The point is, usually the second question would be, what is economically reasonable, right? So if you, I think we were discussing about Canada, if you get hydro, Paraguay is another one, you can get hydro at less than $30 per megawatt. Maybe it's a good place to be, right? And you'll see all the regulation around. Is it a no-go in the very end? But at least if you can put bricks together so that overall it's something that could be supported by subsidy, or lower subsidy, but at least a bit, then it's really something you should look at. I mean, perfect world, brownfield or greenfield, is to get a regulation which is stable, where you get long-term visibility. Infrastructure, you imagine long-term play, long-term construction, long-term vision, right? If you get swing in the middle, it's really tough. So that's really the rule number one, is really being super close to the relationship between public and private. There will be changes. Let's take, we've done an high-speed link lane in France, 60-year concession. You can imagine your concession contract will change, that's for sure. The point is how it changes. How do you find the pros and cons between public and everyone needs some time to do efforts. It's not an issue. It's just like should be a long-standing relationship. Otherwise, it would be super difficult.
Thank you. So we only have about 4 minutes left. So I have a question for Karen, and then I have a lightning round question for all 4 of you. So Karen, one thing we didn't talk about was the geopolitical risks. We've talked about a lot of different other risks when it comes to infrastructure financing, but obviously when you think about supply chains, access to raw materials, that's also a risk for infrastructure. So how do you think about that at Bank of America when you're looking at a deal or a transaction?
Well, first of all, the infrastructure development is global. I think everyone wants the same things: energy and power and digital health. All of those are important, right? So geopolitical risk is hard to ignore. Tariffs, supply chain, concentration, rebuilding is not as easy as you snap your finger. So I do think there's a lot of incubation and, frankly, a will and a set of collaboration that's required to actually really diversify global supply chain. And we've helped the nuclear supply chain when we think about, the enrichment supply chain that is very concentrated in China and a few other countries. And you have to think about the circularity of the critical minerals, because we don't just want to continue to extract and refine. We also want to think about circularity in the critical minerals that's required for an energy transition. So we've spent a lot of time mapping out the middle part, and to make sure that we support companies. And frankly, as a bank, I think that's actually a privilege to be in this capital raising, whether it's HoldCo level equity or debt, whether it's project level equity or debt, whether it's convert, pref. You need all forms of capital to bring people that have different objectives around to the table. So I would say, for sure, if you go to World Bank IMF meeting this time, it's very different than the last time, because it very much is about the nuclear supply chains, about the critical minerals, national security, energy affordability. So a lot of this is trilemma, right? This affordability, the security, and the sustainability, it goes hand in hand. And how do we actually find the perfect projects to actually incubate? So it is a hard challenge. But the scale is actually taking us to a lot of optimization. So the last thing I would say is not to be an AI hype or optimist, but I do think there is tremendous amount of value for AI to optimize the grid. We have to make our existing grid better, whether it's energy supply and demand optimization, predictive maintenance, reconductoring, to do more, to get more out of what we have. Instead of just keep building new and additional power is very, very important. Efficiency everywhere, optimization everywhere. AI can do a lot of that. We're already seeing proof, and we're funding those technologies. We're funding those companies that are really kind of changing the game. The last thing is, I do think emerging markets need a lot more capital. And I think President Al Gore said yesterday, Africa is solar resource rich, but Africa is getting very few dollars or percentage of dollars of the renewable energy financing. How do we change the game? How do we change political risk, currency risk, project risk? How do we really kind of making sure the collaboration, perhaps it's China and Africa, perhaps it's LATAM and emerging markets across each other. But I think we need to go where things can get done, and we need to stop debating ideology and try to get projects funded.
Thank you, Karen. All right, so I'm going to give everyone 15 seconds, see if you can do this. But what is the single most important factor, do you think, to unlock investment at the scale and pace we need. Michael, I'm
You know,
going to you first.
I'm going to say something different. I'm going to say work on the demand side. I mean, we need people to make these, either subtle or major changes in their lives, and that will then pull capital into these projects. So I think we need to get the people on board with energy transition.
I love it. Laurent?
I think one thing which is, again, coming is the environment, right? Do we get the right environment to do things? It might be simple or much more complex, could come with forex risk or political risk. But if we get the rule, then we can play, then we can attract the right partners, then we can attract DFIs, for example. So having the right environment, something stable, please.
Tufi.
Projetos de infraestrutura de toda a natureza exigem que nós tenhamos uma visão social importante, uma visão ambiental importante e uma visão financeira. Então, para destravar principalmente a captação de recursos, é necessário que o governo tenha políticas públicas fortes que garantam e dê condições de segurança jurídica para os investidores. E é o que nós esperamos no Brasil. Fazer uma ferrovia na França, no Canadá, ou em qualquer lugar, ou aqui no sudeste do Brasil é uma coisa. Fazer no nordeste do país uma ferrovia de 1.200 quilômetros é muito diferente e precisa ter muita energia e integrar todos os povos ali contidos.
And Karen, last word.
I'll say de-risking. I think when the market mechanism can take care of things that already make commercial sense, that's where 90% of the funding is going. Let the market take care of it. Let the market take care of it and just drive speed and scale and making sure policy stability is there and don't stand in the way. But on everything else that you need, kind of de-risking, private sector insurance, governments have to come in, loan guarantees, first loss, what have you, and private sector insurance has to come in on new technology, delivery risk insurance. All of those needs to happen such that more capital can go. Otherwise, we're always being sort of demonstration phase.
Well, thank you, everyone. Thank you to our panelists and to our audience. Hope you enjoy the rest of the session.